coming in hot. Where are we dropping?
We are live, Layer1Live. We're going to have a good episode today. All of the other things that I say every single time, you guys know by now. Dima's recovering from some clubs. Mike's drinking bourbon and coffee. It's going to be a lively discussion here today. We're going to talk about BTC. We're going to talk about Tezos. We're going to talk about infinite cash. What else are we talking about, boys?
Sounds good to me. I like that infinite cash. Per your tweet, I want to know when we see some of that infinite cash. I'm trying to, buy some Apex skins and stuff with all my infinite cash stuck at home these days.
Damn, you're still playing Apex? We're all about Warzone these days, man. Come on.
Yeah, no Apex. That's why I need the skins, man. I gotta liven it up. Warzone's the new thing now. But yeah, man, this is gonna be a good episode. Drinking a little bit, a little tired today, but we got some interesting stuff coming up here. Tezos, Tether, Coinbase, futures exchanges, obviously talking Bitcoin. So what about you, Dean? You said
not much.
You said you're hurting.
Well, yeah, a little bit. I mean, I'm staying actually at my parents in New Jersey. So I decided to do that kind of, throughout this time with the coronavirus, just to stick it out here with them, help them out. But I'm a little bit tired because I was on last night, playing a lot of video games with you gentlemen. So didn't get much sleep.
Dope. All right. Well, we have a loaded episode, so we should probably get right to it. We did have one small guy in the corner there. Team update. Mike, do you want to introduce my mans?
Yeah, I finally got a Bitcoin man from Crypto Kaiju. So shout out Crypto Kaiju for having that come through. It came in a mysterious, fragile box, and I didn't realize what it was for some time. So don't have a name. Supposedly, I guess if you scan the kind of tracker thing on the foot of the Bitcoin man, it has a name. So I'm gonna do that here when I get a free sec, and we might have a name. But yeah, another kind of addition here. Did you ever come up with a name for your crypto kitty?
No, I said the community, and I appreciate you guys filling in the chat right now. But I said the community would name the cat, and we have yet to actually go through with that. I think I received the cat on Tuesday of last week, and it was 2 days, 48 hours after that when we were planning on doing it. Obviously everything hit, so maybe it was an omen. Maybe this guy right here is actually the bringer of bad things. But we'll probably do that via our Telegram. If you guys have any thoughts on names, drop them in the chat. Kieran's in the chat now. He says when decouple. We'll talk about that here shortly. But other than that, let me get to the stats from the week really quick. We've got top 5 countries. They remained the exact same. It's the U.S., Australia, Germany, UK, and Canada. Our top 3 episodes from the past week are The Block. So we had Mike Dudas. We had a great interview with him. We had some guy named Mike Finch from Sutler Ventures and Parada Capital. That's coming in second.
Not watching.
And then EOS Nation is still pulling in those views and coming in third. Upcoming guests we have for the week are going to be Terraform Capital. I believe that's at the end of the week. We are trying to get the guys from Solana on next week, as well as I'm blanking right now. Let me
Kudo?
No, we need to set up Kudo, man. We're still in the process of setting up Kudo. I'll get it here in a second. But other than that, that's the stats from the week. What do we got for breaking news? What's going on?
Yeah, so obviously, I think starting at what has been a major news piece for not just crypto, but the entire economy with this kind of, as the CoinDesk article title says, into the unknown, no limit on Fed money injections. If you haven't heard, if you haven't been on social media or watching the news or anything, the Fed has basically said that there's an infinite amount of money that will be available for folks to make sure that this is a swift recovery once basically all of the coronavirus disruptions are handled and kind of smoothed out. So this is a process that's been going on for a long time. This is obviously our first kind of recessionary crisis or just general crisis. Obviously, first pandemic for most. But the Fed's role here is to bring confidence back into the markets and help people understand that this is going to be a brutal thing, but not something that lasts forever and kind of becomes a new paradigm for the economy. So they kind of started in the billions with funding, and then it jumped to hundreds of billions. They've been talking $1 trillion coins, and now they've pretty much just thrown everything out the window and have said that they will continue to quote unquote print as much as they need at an infinite level. If you need cash, you will have cash. So quote unquote, don't worry. Obviously, there are a lot of issues with that, which we'll get into.
Yeah, I thought the $1 million coins or $1 trillion coins were a joke. Is that actually that those 2 platinum coins are actually a thing that was actually brought up as a proposal?
I don't know. It's so I haven't looked into it because it's just so cringe that I don't even want to figure out if it's a joke or if it's real or not. But the way that people are talking about it seems to be real. If it was a troll, I think we'd have seen that by now. So somebody's talking about it.
Yeah, that's going to be a majority of our episode, I feel like, talking wise when it comes to the discussion portion of this episode. We're going to talk about BTC decoupling from maybe equities markets. We're going to be talking about store of value. I think BTC is up based on our ticker right here, 8% on the day. And I don't know where the S&P, I don't know where Dow Jones is, but that's going to be primarily the talk point. Is this the end of capitalism, and where the hell do we go from here? I think that's the question on everybody's mind. So Dima, what are your initial thoughts? I know we're going to hit in a discussion, but initial thoughts on unlimited monies for everyone.
Yeah, I mean, I titled this a Fed Unlimited Money Cheat Code. So yeah, it's what Mike said. It's basically they've went out, with all of the tools that they have to the maximum capacity to basically instill that confidence in the system, provide liquidity. So at this point, that's it. All of their stuff is out. They've used every single thing, and that is the maximum amount of things they can do. So now it's going to rely on actually for more stimulus on the fiscal policies, to provide additional things that can happen, like basically helicopter money. So, but yeah, this is pretty much all they could do, and they went full force. All the tools.
Gotcha. It looks like we're having some issues on YouTube. We're not coming up on the live feed, and it's not showing us there. So, I'll look to fix that while we move on to quick news. We'll hit some couple quick news, probably 30 seconds each, and we'll move on to the discussion portion, man.
Yeah, for sure. I can just hammer through these 4 quick news points here while you figure that out, Q. So, a shorter quick news section here. Obviously, after this, we're going to talk discussion, a lot of the Fed printing, a lot of kind of general crypto health after what was, a crazy week last week. A little bit of Bitcoin news, some ETH news, continued STEEM news, and then EOS and Tezos rounding it out. So first to start, as we have all seen or heard about, stablecoins and crypto have absolutely skyrocketed, both in volume, market cap. And while Tether has continued to have its issues, they are not discriminated there. Their market cap is skyrocketed as well, basically propelling it into the 4th overall cryptocurrency or token by market cap, just behind Ripple. They've done quite a bit of printing as well, but done it in an interesting way. They've printed something like 180 million new USDT for what they're calling, quote unquote, inventory replenishment. Which no one, really has a definitive idea of what that means. There's been some theories that it means that they're, expecting buys at maybe certain prices or buys over time, and they want to make sure they have the Tether available. But Tether and in general, stablecoins are absolutely crushing it. On the Tezos side, we talked about this many months before about kind of the different allegations, the different lawsuits going on with Tezos, and one appears to have settled. So there were a group of seemingly rich Tezos plaintiffs who said that Tezos went about offering a security in a non-regulated way. basically saying that, the Tezos ICO was a selling of securities, and they wanted some money back from the money that they had put in because it was unregistered. And surprisingly enough, the Tezos Foundation has settled with these plaintiffs for $25 million. It's not a lot of money when it comes to the holdings that Tezos has, even though they do have a large percent in Bitcoin, which is obviously seeing a huge drop. But from a regulatory standpoint, any lawyers involved in blockchain or crypto out there, this is a big deal, because it is a settlement that we see now. It appears the settlement happened because if it had not occurred, Tezos would be required to go to the SEC and basically talk further around whether or not the ICO sale was an unregistered sale and whether or not the Tezos token is deemed a security, which, as we've seen with Ripple in the past, people do not want to do that, right? You don't want to open up the opportunity that your token is a security. So that is Tezos. Kava. So we had Kava on the podcast many months ago. Brian Kerr from Kava came on and talked to us all about basically their alternative to Maker. They've got a stablecoin just like Maker does. Their stablecoin is called USDX. And then they have their own goals and kind of monetary policy. But Framework Ventures, another guest we just had on recently, has proposed that Kava take advantage of the issues that Maker has had and basically push forward with higher inflation in order to attract people to use the Kava system versus using a system like Maker at this point. So they're proposing 15% inflation in the first year, with a decreasing level of inflation over a following 3 to 4 year period. This all comes at a time when Maker was running basically these debt auctions to recapitalize what it had lost in the exploit that we talked about last week. So Maker was somewhere around $5 million in debt after a big drop in ETH price, and the block, another guest we just had on, has basically said that you can see on the blockchain that that the Maker Foundation are actually the ones that are bidding and winning for the debt that is outstanding. So they're kind of running this auction to repay the $5 million in debt. And out of 33 different auctions, it's believed that the Maker Foundation has won every single one. So they basically, just like the Fed, printed more Maker tokens in order to win the debt auctions and recollateralize Maker in the same way the Fed is doing with bonds and other mortgage-backed securities and whatnot. So a lot of drama behind Maker. We'll obviously keep you guys posted as other options emerge, like Kava. And then finally, on the quick news, as many records have been broken on the downside when it comes to BTC price or futures liquidations, Coinbase actually broke traffic records and saw pretty insane volume during the market collapse last week. The important piece here that I think should be highlighted is that Coinbase was an exchange that did not go down as this was all happening. And part of the CoinDesk article about how these traffic records and volume records were broken or nearly broken was that they've been planning on ensuring their exchange would be operational in times of extreme volatility like this, since they saw crazy buy volume back in 2017 and the subsequent run up to 20K on Bitcoin price. So shout out to Coinbase there. Of all the insurance funds we've had liquidated and all the chaos. Even I think it was Robinhood was down 2 or 3 times during general traditional and crypto market volatility. Coinbase remains up and is continuing to function, obviously. So shout out to those guys. But some quick news points there. Any thoughts there, Dean?
I don't understand why every single exchange doesn't have that same approach when it comes to expecting volatility and these spikes and these events that we have, to have a sustainable infrastructure in place so this doesn't happen. It's like, we've been in this industry for so long, right? And we know how volatile these assets are, and we know how the behavior is from traders, from investor standpoint, is when the panic hits. So it's like or you have like DDoS attacks that can happen. Like you should have all these precautions in place before it happens. It's like did you guys not expect this stuff happening? Like Coinbase is the only one that really thought about it. Come on, it's kind of strange. So yeah, kudos to Coinbase for that. But,
yeah,
Bybit did a pretty good job too.
Bybit as well, yeah, for sure. I mean, Coinbase obviously from kind of an easy buy and sell standpoint is the largest with crypto on the spot side. So I think they've realized that while investing money into, say, the engineering side does not immediately pay off, from a profitability standpoint, right? It's not a very direct way to increase revenues or increase profits. They've seen this happen so many times before. They understand that when the market does go up like crazy or down like crazy, they can make or lose so many customers if you can't get on and sell your Bitcoin, or you can't get on and buy more Bitcoin. So yeah, it's a long-term approach from Coinbase, and it's paying off now. It will build trust with folks, I'm sure, even if say more experienced traders aren't using it. Maybe it's an opportunity for Coinbase Pro as Coinbase starts to work with a little bit of leverage. Maybe it's an opportunity for them to onboard some more experienced traders.
Yeah, guys, I'm having some there's some technical issues with YouTube. I'm still going to continue to work on it, but it looks like we're not coming up on the dashboard, so we'll figure out that as we go forward. But let's get into the general discussion here about obviously that value prop with Bitcoin, as Mike just walks away. This has been such a shit show episode. I'm going to get to some of the comments right off the bat. So we've got Kieran in the chat. Appreciate you guys commenting here. Kieran said when decouple, and he said based on what we were saying, we said soon. He said, are you ready for money printer to go burr, because it's already going burr? So I know that's like a huge meme in today's like Twitter sphere and things like that. So it was discussed as a solution back in 2011 as well. This method is real, but it's just some politicians talking about wanting to do it at this point. Kieran also said found the relevant bit in the U.S. code for the whole printing $1 trillion coins. And then Scott Harris is in the chat. What's up, Scott? What's going on, man? So we appreciate you guys dealing with what we got going on the technical difficulties, but appreciate you guys tuning in, man. Leave that like, and if you guys can, spread the word around us doing Layer1Live. So without further ado, let's hop into the discussion portion of the episode. Obviously, it's going to be around Bitcoin's value proposition. Is it store of value? Where do we go from here with the Fed printing all this burn money? So what do we got, Dima?
Yeah, so basically the biggest question right now in the industry is how has the value proposition, for Bitcoin changed? The store of value, is it a monetary hedge, with all these things happening with central banks, everybody lowering rates, everybody printing a lot of money. And we're still yet to see a reaction from Bitcoin to the upside, in regards to these things happening, because really Bitcoin was kind of created for this purpose, right? And it was introduced to hedge the inflation and hyperinflation specifically as well. And we're not really getting that yet, but if you do study, kind of how this works when the Fed starts stimulating, when the central banks drop rates and stimulus starts, it really starts with the deflation first, because everybody goes into the dollars. It's a risk-off environment. And there's a period of deflation. Now, during that period of deflation, that's when you'll see Bitcoin obviously struggle, right? Because it's deflationary situation there for the dollar. But eventually, what happens is that once that period of deflation stops and things start to get back into normal, that's when the inflation starts rising, and that's when we should see Bitcoin actually start to perform, when we start getting an uptick in inflation, and especially in distressed countries like I mentioned before, where maybe here the inflation won't be as high as elsewhere, even though we got the unlimited money cheat code, but that we actually export a lot of our inflation to other countries. So the other countries that are have weaker economic kind of situation, they'll be forced to do similar stuff that Fed does, but it will impact their inflation ridiculously and therefore impact the people in that country and eventually, hopefully, bring them to Bitcoin to hedge that hyperinflation that they might experience.
Yeah, that's the super bullish case, right? If some country says, okay, we need to go to the gold standard or even the Bitcoin standard now that maybe we kind of have like runaway inflation on our sovereign currency. Do you see that kind of as a actual like thing that could happen, or is that kind of pie in the sky with all the people in crypto thinking that some countries are gonna use Bitcoin or along with gold to use it as their like currency standard?
The problem is that there's going to be restrictions in place for people to keep them as a hostage in this situation from the government side. And that's something we'll talk about. Russia. The news came out on Russia about cryptocurrency and Bitcoin. We'll get to that in a sec. But these things are something that will probably come, and we've seen in the past where so some distressed countries, we had an uptick in like Latin America, where people are trying to buy Bitcoin there, because they don't see, the way that things are going economically. And it's really going to be a huge test, right? It's still going to be a theory that will be tested, and we'll have to see the results. Nobody really knows, but in theory, yeah, this, should be happening. And I mentioned that, one thing that could really slow it down is if there's no onboarding tools in those distressed countries to onboard people to buy crypto Bitcoin, to hedge, to use it as a tool. It may be restricted from the regulatory side of those countries, or maybe maybe the premium that you're going to pay on that Bitcoin through an OTC deal or local Bitcoin is going to be so high, and it's going to be so inefficient. So hopefully all those things and efficiencies are there for on-ramping when things hit the fan, and give people a choice to be able to use this tool. But then, again, at the same time, governments might not want to do that, because then if you're dropping their currency and buying Bitcoin, then you're just escalating the inflation, which is not helping, the whole situation. So it's a really tough scenario.
It is, yeah. It is, yeah. And Bitcoin, Bitcoin in a lot of ways is a network, right? It functions in a lot of same ways that a social network does. Obviously, when Bitcoin was first getting started, right, there weren't a ton of users. There weren't a lot of people invested in the growth of Bitcoin. And as a decade has passed, that number has greatly increased, right? The fragility of Bitcoin has decreased greatly. And I think a lot of that network effect has to do with the various narratives that Bitcoin tries to run with over the years. The big one before the store of value or digital gold narrative was around payments, right? Essentially, whether you are a streamer or a sex worker or anybody who does business where there's some sort of value transacted that a specific government might not, or a specific intermediary might not want you to participate in. Bitcoin solves that problem. But as we saw more and more people holding Bitcoin, and that narrative generally changing from something that people would buy groceries with or transact value across borders with, it became this digital gold and store of value correlation. But narrative. But as we've seen Bitcoin drop by over 50% since this started, especially in the US, it has to date outpaced the traditional markets. It's hard to sell that store of value narrative to various institutions when they would actually be in a better place having bought the S&P or having bought the Dow or having bought the NASDAQ, at least at this point, right? Mm-hmm. We might still see Bitcoin recover and the equities markets continue to decline, but kind of as we move forward, the new narrative we're going to hear, as I was talking about on the interview we did, was that Bitcoin, like you said, Deem, is going to be this monetary policy hedge, right? And everyone's going to say, listen, in a crisis moment here, in a black swan event, there is no asset that will hold value, right? Because everyone's pulling off to dollars. Dollars going to cause a deflationary scenario, but whenever things chill, Bitcoin's ready, right? It's this monetary policy hedge. Now, I think there's a chance for that, but I think the issue becomes that Bitcoin becomes a primarily retail driven movement again, whereas for the last 2 to 3 years we've seen a lot of institutions begin to participate with Bitcoin, even if just trading. And as that falls off, as we see what I would guess to be a declining amount of open interest and volume on say the CME, or in general OTC purchases from a lot of these large institutions, especially in the US, it's going to be hard to sell that digital store of value to anyone other than your typical civilians, your typical retail folks. And what that means for Bitcoin, I think, is that it becomes what we have seen it as in a bear market, right? A more manipulated asset, something that can be moved by whales, as we'll talk about, and something that can do very well as a store of value for retail folks over a specific amount of time. But we're not moving into a period where consumers are flush with cash, right? We're moving into a period where unemployment rates are going to skyrocket, and we're going to see we're going to see folks jobless at records we haven't seen in decades, right? So I struggle to understand kind of who is coming, right? Who's kind of the new buyers in crypto coming to save everybody from what seemingly will be a bear market for crypto here for foreseeable future.
Yeah, I'm talking about strictly from the U.S. perspective. I know we have viewers and listeners pretty much all around the globe, but from the U.S. perspective, when they first announced the stimulus package, that was like something that I felt was bullish for Bitcoin, right? It was like, oh, people will use this extra money that's coming from the government and maybe possibly put it into digital assets, put it into Bitcoin. But what I'm hearing now is that there's going to be some type of like limit, or like it's not going to be able to be spent on things other than what the government allows it to be spent on. So it might even come in the form of like some credit card where you get like a $2,000 limit. It has to be spent within 20 days, can only be spent on this, that, and whatever. So that initially had me super bullish, because any money that you could get from like an increasingly, even like after Dima's talking about with that deflation period, an increasing inflationary currency, I feel like that would have been bullish. But now I'm hearing differently about they're going to put restrictions on what that money can be used for. I did find it interesting as well. Last week, the narrative like shifting every day, where like Bitcoin was down 50%. It was like, oh shit, this store of value it's off the table. And then literally Bitcoin was up like 10% and the S&P was down. It was like, look at this, like we're back to store of value. And it just, I mean, people are going to say what they have to say to push whatever narrative they want it to have. But I think like overall, it seems like Bitcoin, being around 6,200, going increasingly into this decoupling stage, I think will help the narrative a little bit more, because I think it did take a big hit with that 50% move in that one day. So
yeah, and it's everybody is increasingly talking about how Bitcoin's correlation to gold, or Bitcoin's correlation to the stock market, is kind of the new hot topic, right? So there was an article that came out from The Block basically talking about how the rolling 30-day correlation between Bitcoin and the S&P 500 has hit all-time highs. This was as of last week. So, essentially this correlation has been tracked over time, and it officially peaked at that all-time high. The all-time high was about 0.62 correlated to the S&P 500. So if the S&P moves, say 100 points, Bitcoin would move roughly 62 points in that same direction. The three previous times this has happened in just about the last 4 years was about September 2018, right, which was not necessarily a bullish period for Bitcoin. The end of 2017, so about November, December 2017, which was obviously an incredibly bullish period for Bitcoin. And then about the September, August period of 2016, which was not necessarily a giant bullish scenario for Bitcoin either. So even looking at the data around correlation, there's not really an easy out for, hey, what will Bitcoin do next? And I think that's what we'll continue to see from specifically the correlation standpoint, right? I think people are trying to kind of take that easy out and transform these various narratives into a discussion around correlation, when likely what will happen is, I think there will be many days, many scenarios where the stock market goes up, gold bases, and Bitcoin goes down, right? Or the stock market goes down, gold goes up, and Bitcoin bases, right? Mm-hmm. Where basically Bitcoin does not move with gold or with the stock market, kind of the two general areas that people are looking for this decoupling or this correlation. It's important to remember, right? On a broader time scale, on a broader horizon, Bitcoin has only been moving with gold for a few weeks before this crisis happened, right? There was a weekend where the Iran conflict was really heating up and it started to move with gold. But
that seems like a year ago.
Seems like forever ago, but it was likely a lot of these, various hedge funds and macro funds taking advantage of Bitcoin being traded 24/7 and having access to Bitcoin, after hours during the weekend. And now that this crisis has hit, Bitcoin started moving with the stock market, right, downward. But it's only been a week, so per Dimitri's point, it's still so hard to judge kind of where we go from here. Do these correlations even matter over time, over a month's time, over 6 months' time, a year's time? And it's important to be patient.
Yeah, I think a lot of people out there are understandably concerned with not just Bitcoin, but all of the, and I always bring it up because I am one of those people, all the like altcoins that follow in its wake, because I think you have this increasing feeling that only Bitcoin or maybe only Bitcoin and Ethereum are going to do anything in this type of environment, and like the others will slowly fade away into non-existence. Not non-existence, but like pretty much irrelevant, and so their market cap will continue to decline. It will be interesting to see, because along with that narrative that was being played out last week, where they were like, this is back to a store of value, what the hell happened with 20% gains into altcoins right after that crash? Like, what was that about? Like, Dimitri, do you have any thoughts on that?
Which specific one are you talking about?
Literally every coin on the top 100 gained like 20%, 30% in like a day. You don't remember that? That happened on like Saturday. I think that was Saturday.
Okay, so after the real crash last week.
Gotcha. Yeah, the crash happened, and then there was like one day. It was that first day of green that we saw, and Bitcoin was up big. Bitcoin was up, I think, like 10%, something like that. And there were some altcoins up, 60, 50, 40%. What is the narrative around why those actually pumped like that? I understand the market cap's smaller, they can be manipulated, but people actually are putting money into those like extremely risky assets in the same environment that we just talked about, where everyone's running to cash.
Yeah, I mean, I think when Bitcoin bounced from the bottom there at 3.8 due to a systematic issue that we had on Bitmex exchange, where artificially underpriced Bitcoin, and once things started to correct and we bounced, we bounced like 50% or so, right? And then that inefficiency when the Bitcoin was dropping translated into the alt market, because there's a lot of, I guess, algos that play along in terms of, all right, Bitcoin's going up, I'm buying alts, and that goes up, and that kind of, correlates there. So, and the vice versa, right? So then, what happened was with the alts, they obviously got underpriced because Bitcoin was falling due to systematic issue. And then once things started to correct to price the asset correctly, then the altcoins were catching up with that, right?
Got it.
Those, market makers and as the market makers are coming back online, because you have to understand that a lot of these prices are driven also by the available market making liquidity. So during the time when the prices were falling, the spread for these market makers was widening, and therefore you have these huge gaps in prices for altcoins, for Bitcoin. And once liquidity started coming back, once market makers started coming back, that's when we saw things starting to bounce back up to the prices where they kind of were before the whole Bitmex thing started. So That's my theory on it. I don't think it's real demand in terms of
Yeah,
people just coming in and buying
not
these
like a
altcoins
retail
right now.
demand. Yeah,
Yeah,
yeah.
like, I don't know how I would explain that.
Hmm.
But I wanted to also mention that, as we're talking about this, Bitcoin, store of value, and all this stuff that's going on as far as the monetary issues, I feel like people really forgot, what the hyperinflation is, because it's been so long since we've seen a country go through a huge hyperinflation, and therefore we don't really know like how things will react, right? Like last time we had like a really huge one that everybody knows about is from 1975 to 1991 in Argentina, the hyperinflation that happened there. They had 300% inflation annually. Like it's insane. Imagine they had Bitcoin during that time.
Mm.
Like what would be the effect there? So we don't know. Just like, and also people really forgot like how hyperinflation affects people, jobs, and so on. And per Mike's point, since a lot of people are going to be losing jobs because of what's happening, really inflation doesn't help that either.
Right.
So runaway inflation.
Yeah, I mean, deflation, like you said, I think is a real risk that needs to be handled first, and then hyperinflation, right? I think specifically in the U.S. and in other major first world countries, like many of the major ones in Europe or China, right? I think that's much more of a slow, kind of steady roll, right? In the same way that you might see a slow, steady roll with the adoption of electric cars. It's not going to be something overnight where everybody shifts away from gasoline powered cars, but you'll have kind of this slow growth into those electric cars. And I think the same thing will happen with fiat if, let's say, for example, we get some real deflationary issues first, which would not be good, right? Where basically, the value of cash, the value of the dollar continues to increase, putting pressure on the price of goods, right? And that's arguably just as bad as inflation or hyperinflation in a lot of ways, because it hurts the overall economy, the various manufacturers and suppliers of these goods when they can't earn as many dollars on what they're selling. But the problem I have with this new kind of emerging narrative with Bitcoin is that I feel like an alternative to hyperinflation must come with the store of value narrative, right? I don't think you can have a monetary policy narrative or a real legitimate monetary policy hedge without the store of value narrative, right? So let's take, for example, 2, 3, 4 years from now, right? The coronavirus is over. We have a vaccine. The economy is stabilized. We're moving out of this recession or depressionary period or whatever it will end up being. And, the dollar maybe is starting to show some signs of inflation, right? That's kind of the new concern. And we see some strong retail demand being driven into Bitcoin. We see a lot of investment activity into crypto and blockchain in general, and kind of this new, we get a new wave, maybe some new narratives. Well, when the next crisis happens, right? If BTC drops by 50% again, whatever value you have saved, whatever, kind of naturally deflationary pros that you've received from Bitcoin over those last 6, 8, 10 years, whatever it is, until the next crisis, until the cycle continues again, if those are completely wiped out, right, by a massive black swan event, by a massive crisis, the time when you need that hedge to exist, right, does not matter, right? Because all of that value is completely wiped off the board. And I think that's going to be the struggle that people have, is when a normal consumer, right, when somebody who doesn't understand how Bitcoin works, somebody, who's a husband or a wife with 2 kids and, is just kind of getting back to normal after this recessionary period, when they look and they see Bitcoin, why are they going to choose Bitcoin as any substantial amount of their portfolio over stocks or bonds or a wealth manager or any sort of diversification in the traditional markets that have a much longer history, that that say didn't drop as hard as Bitcoin did. And I understand that Bitcoin's, much more mature, and has a lot that needs to be, put in place from an infrastructure standpoint. But I think there needs to be so much more work done that we are still very far away from a point where Bitcoin can execute on a monetary policy hedge or a store of value hedge. I think it will survive past this. I don't think this is going to kill Bitcoin by any, stretch of the imagination, but I find it very hard in the short term, medium term, or even like a 5 to 10 year term to see Bitcoin becoming, the kind of the major currency that so many people are saying it's going to be, right? The world reserve currency, the main digital currency.
Yeah, I wonder if you couldn't teach a majority of the population that Bitcoin is a hedge to inflation, but also not a store of value. Because that's the argument you're making, right? That those two need to be they need to exist at the same time. But if you look at it from the perspective of, okay, during risk on environments, it is a hedge to inflation. But when there's like this big black swan event, I can't use it as a store of value, so I have to flee somewhere else. I can see those two existing at the same time, where you're kind of saying it needs to happen together.
Yes, I think so, because of the important differentiation between the monetary policy of Bitcoin and Bitcoin itself, right? If Bitcoin itself as an asset, right, as a digital asset, as something that I agree is anti-fragile, right, is scarce, all of these things that Bitcoin is sold as. If Bitcoin the asset, if Bitcoin the traded asset does not act in line with the monetary policy that it pushes forward, it doesn't matter, right? Because if you invest in Bitcoin at whatever price, and the monetary policy, as we know, stays the same based on code, but the price changes in a way that doesn't reflect that monetary policy, it doesn't matter, right? It doesn't matter for the end of day investor. It doesn't matter for the end of day person looking for that store of value. And I think the reason we've seen that time and time again with so many with so many kind of pump and dumps happening with Bitcoin is because of this immaturity, and getting traditional finance involved so that liquidity is not an issue, so that exchanges and Bitcoin whales and so many others, miners, right, can't manipulate the price of Bitcoin for their own gain, is such an important piece for that store of value, and thus that monetary policy hedge to come to fruition. That, like I said earlier, I think that's why you have to have both, right? Because to the average consumer, to the average investor, to the average holder, they're not planning a 20, 30, 40, 50 year kind of, cypherpunk investment timeline or kind of new world order that they see. They just want to know that when their 8-year-old is in college in 10 years, that this Bitcoin won't be worth 40% less or 20% less, right? Because when that tuition bill comes through, if there's a black swan event and Bitcoin drops by 55% or 50% or whatever, that's a huge issue for them. So that's my point, right? Is that you have to understand that Bitcoin as an asset, Bitcoin as a free market, publicly traded asset, has to act in the same way that its monetary policy does over time, in order for that monetary policy to matter.
It's funny how the tables have turned. Now we have Mike, that's a Ukrainian bear. I agree with you. On that, to a certain extent. I think on the longer picture, I think we'll get there. Longer time frame, and short-term pullbacks where we drop 40%. Won't matter that much during this moment where we have these systematic issues. Eventually, hopefully they'll stop, but on the longer term, I think things are still looking good, because I think some financial advisors are allocating a very small tiny proportion of like their portfolio into Bitcoin that we've seen, and then obviously after the corrections that we have in the stock market and so on, there's obviously, once we get out of this coronavirus thing, there's going to be a huge boom in stocks, and a lot of people loading up on stocks, to kind of waiting for that bounce, because the really it's going to be pretty big, and we always know that when stock market is going down significantly, and we fall into that recession, then it's actually a good time to pick up stocks, to hold them for the longer term, because when the bounce is going to come, you're actually picking up at a premium. So I mean, at a discount. So, but
Yeah, I'm not going to sit on my high horse here, but I do think it's interesting. The meme ability of infinite cash and what we've seen from the Fed. Like, I wonder if that doesn't like weave its way into more retail investors or just regular people's minds, and they start to kind of consider the things that we've already known about for a long time, right? And one of the think about the reasons why we're in Bitcoin to begin with. If people start to question like infinite cash, what does that mean? They start to like think about things that maybe they hadn't thought about. So I wonder if that's bullish for Bitcoin too. I'm by no means thinking that or ever going to believe that like the majority of the population cares about the things that we care about. But I think it does push 5-10% of the population to be like, what the hell? What are these guys doing?
Yeah. And just to be clear, right? Like, I'm not bearish Bitcoin on a long time horizon. I think it's just it's very difficult to say that this specific month or quarter or even year is quote unquote Bitcoin's time, right? This is when Bitcoin emerges as the alternative, right? This is the new kind of global currency. That is very difficult for me because of those reasons that I explained. But on a longer term horizon, right? 5-10 years down the road, if you look at the first 10 years of Bitcoin, right, where it's basically been it's basically occurred to prove itself as something that's anti-fragile, as something that can continue over a decade's time frame. It is something that can grow a network, right? Grow a community, grow this kind of brand new digital financial economy of sorts, or financial monetary policy. That has been proven true. In the past 10 years have been super bullish for Bitcoin, past 11 years. So as we look forward into the next 10 years for Bitcoin, and I know that's not an answer that anybody wants to hear. They want to know, everyone's used to buying Bitcoin at 5K, and in 6 months you can sell it for 20. But on that longer term time horizon, the things that the Fed is doing now, things that it's never done before for the most part, will be bullish Bitcoin. I just don't think it's going to be bullish Bitcoin by June or August or even September, So that's the way that I'm thinking about it. I'm thinking about it from much more of a longer term timeline, a broader timeline. And again, I think the shifting of narratives is very dangerous, especially for retail folks. When you say, no, it's not a store of value, it's a monetary policy hedge, right? 60 Minutes is talking about how the Fed's printing all this money. Well, Bitcoin's the answer, and if it goes from 6K to 3K, all of those consumers who need that money are going to get burned again. So
yeah,
that's where I stand.
Yeah, I mean, we said we were going to talk about it for a while. I think we, dedicated a good portion of the episode here to talking about Bitcoin and its various narratives and everyone's different responses to this. So we do have other things going on in the crypto landscape, believe it or not. But we will get to some comments here. Scott's in the chat saying that he did receive a notification about our YouTube, but I still don't see it up on the dashboard. So we'll just chalk that up to an L here. Cryptov is saying, "Are we all going to pass away?" I'm not. You might have to hit the medical professionals for that. I'm not sure. We want to go into that conversation. Kieran's talking about our that stimulus package that I talked about, and it being in the form of like a credit card. He was saying we already have those sorts of things in Australia. If you're on any sort of social security scheme, disability, student, unemployment, you get a card that's locked to certain items. So that seems to be kind of like similar in the U.S. We've never done things like that, other than I could think maybe food stamps. That's a pretty similar process. He said bullish equals bearish, and then Kieran's saying, I can imagine it'd be pretty annoying if you're a student and you can't go to the movies to whatever with it, or quite a few other scenarios. I think he's talking about Bitcoin's use case as payments, as a payment system. I'm not sure, but
yeah, we'll talk about that. That seems to be coming with Backed
Yeah.
and some of these other things. But on the futures side, right, on basically the side that I think will be easily manipulated in the times to come, what's the latest with Bitmex, Binance, Bybit, and Deribit, Dima?
Yeah, so obviously all those exchanges got hit during the time when Bitcoin was dropping like crazy. So their insurance fund got hit, especially exchanges like Deribit and Binance got hit pretty hard, but Bitmex didn't really get hit pretty hard. They lost maybe like 1,600 Bitcoin or something out of their insurance fund. But then the next day, they replenished that back, and they're sitting at the all-time high for the insurance fund at the moment, which is 36,500 BTC. So Bitmex handled that pretty well. Their insurance fund didn't get impacted, even though the issue happened on their exchange. So and then you have Deribit that lost 53% of their insurance fund during that time, and they're slowly replenishing that. Also Binance as well. Let me see. Binance fell. Yeah, insurance fund fell by 51%, just like similar to Deribit. So they all took hits, and everybody's talking about kind of like safety of funds and like what is the best kind of exchange, especially when we hit these type of volatile markets. And it's actually turning out to be like Bybit is coming out to be that kind of like the champion there. Where they handling execution, where the platforms, the engine is still running, everything's going smoothly there, and where they didn't have an issue in terms of losing funds out of the insurance fund. Even though I don't know how much they actually have in that fund. To be honest,
which one?
The Bybit fund, insurance fund.
Yeah, I'm not sure. They don't talk a lot about that. That's been my only complaint with Bybit, is that you don't get as much transparency. It seems, and maybe I'm just not clued in. Maybe it's on their blog or whatever. But they've obviously, at least at face value, remained unscathed from this, and I think we'll get a lot of new users because the issues originated on Bitmex, and Bitmex seems to be the one that people are complaining about. It's nothing new for Bitmex. Obviously, they really didn't see any issue with their giant insurance fund. So they will continue on as they always have. I think the insurance fund stuff here is very important as well, because as we get into a time of extreme volatility for Bitcoin, where you have a handful of folks who are super bullish, a handful of folks who are super bearish, and then probably most people who kind of fall in between, meaning that because those majority of folks fall in between, perhaps they're pulling money off of exchanges, right? They want to sit on the sidelines. They want to understand kind of what the new narrative is. Where's Bitcoin go from here? Liquidity dries up on a lot of these exchanges, which then further impacts volatility, right? So if there were so many shorts between a certain price range, now there are 50% less, right? Or so many longs at a lower price range, now there's a significant amount less. So it's important to understand, if you are a trader on any of these derivatives exchanges, that this volatility can really potentially harm you. And obviously this isn't financial advice in any way, but just from a fact standpoint, right? If a Deribit has had to put in 500 BTC of their own money, and Binance has had to add, $4 million or something in USDT for their insurance funds, if we see another massive drop due to a lack of liquidity and increased volatility, why is a Deribit going to put in another 500 or 1,000 BTC versus socializing losses on the exchange? Why is CZ gonna put in a 10 or 20 million dollars into the insurance fund versus socializing these losses? And you could say that they're going to do it from a brand standpoint. They're in it for the long term. I think that's it's a viable reason why they would do that. But unlike the Fed, a lot of people will kind of cap what they're willing to put in and save these insurance funds. So we see a giant drop down to 3,500 or something, and Deribit goes offline, even if even if you guessed it right and you were short, or you were, buying puts or whatnot on Deribit, there's a chance that they're just done and your money's gone, or there's a chance that they have to socialize losses and you're only going to make 60% of what you're owed. So it's important to remember, right? The insurance funds aren't just exchanges kind of collecting money and trying to be their own bank, right? These have a real reason to exist. And as they go from existing to not existing, that becomes a real problem when volatility is super high and liquidity is potentially super low.
Gotcha. All right. Well, I have the next story here. We've got a story from CoinDesk detailing venture capital investments in the space going down from a volume perspective, or I guess from a cash perspective, and staying steady from a volume perspective. So I guess from 2019 to 2018, there were 15 fewer deals, somewhere around 807. But the amount invested went from 4.2 to 2.8. So the amount invested from a venture capital perspective went down. That's still up from 2017, when I think that's like 160% or something like that, from 1.2 to 2.8. But basically, it's outlined in this CoinDesk article, venture capital investments going down in the U.S. as well as increasing in China. There's a lot of different perspectives you can take on this. I think coming from the article, it says that this might be a sign of the industry maturing because angel investing is going down while more corporate investments are continuing to go up. So that's just the article from CoinDesk. I think we'll continue to see venture investment, but it is interesting to see the amount invested going down. I think when you talk about these data points, it's important to realize most of this comes from huge investment ops. So in 2018, they detailed that Bitmain was 400 million worth of that 4.2. Coinbase got a 300 million Series E. Hyperchain got 234 Series B. Those were the majority. So those large investment opportunities, late stage investment opportunities, kind of went down from 2018 to 2019. So where we were kind of detailing Bitmain's 400 mil in 2018, the biggest one in 2019 was Ripple's 200 million and Figure's 103 Series C funding. So I know you have bear signal question mark on here, Mike. What does this tell you about the space? Are you, obviously you're a little bearish if you're writing that, but what do you think?
Yeah, I don't think it's necessarily bearish. I think you're exactly right. I think you have to understand how outliers like a Bitmain or like a Ripple can skew the numbers. I think the other point to understand too is that once you're a Coinbase and you're at basically Series E with that giant fundraiser, while cash on hand is always good, especially to weather what could be a bear market here coming up, it's not necessarily needed, right? If you have hundreds of millions of dollars and you can weather the storm here for however long, it's understandable that you're not going to go out and be raising a lot of money. The other important kind of theory that the article brings up, or thesis the article brings up, is that while the total dollar value has decreased, the number of deals has increased, meaning that what we're seeing is we're actually seeing more smaller startups raise money. They're only raising 3 million, 5 million, 10 million, which isn't going to make a huge dent when we're talking billions of dollars. But I think that piece of data there is definitely bullish. So, obviously times are sketchy right now, and there's, a variety of different bearish or bullish signals, but I found it interesting that kind of the VC amount could be used as a way to, potentially track how the market in general is moving. Like I said, so much infrastructure is still needed. The tech is constantly evolving. If we see a giant drop off in VC money, or we see a giant gain in VC money in 2020, then after the fact, we might be able to say, okay, new technology or general blockchain technology is headed one way or another, right? It's headed up, it's headed down. So for me, it's kind of a time will tell.
Yeah, it's always interesting to see like the U.S. kind of China relations, and I think it says over the past 4 years, VC deals have been shifting from U.S. to China. Obviously, it says from 2015 to 2019, VC deals from the U.S. dropped to 20%, while VC deals in China went up 20%. So, it's interesting to see those VC deals move from one space to another. That could just be, I mean, honestly, the more interviews we do with people in the space, and especially in like the DeFi sector, they seem to have some knowledge that most of this money lives in China, right? Like most of this, the cash flow that's going into DeFi happens, in that region. So it's interesting to see that, but it's not, not something that's surprising to me based on having those interviews and talking to these people in the DeFi space, seeing that there's so much money in China to begin with in crypto. So,
yeah, and I think a clear regulation will help the U.S. as well, kind of move forward. I think, this is just my guess, right? But I would guess that a lot of folks are not willing to put in money on an investment that's a much longer time horizon until we see some very clear, definitive guidelines on, who is responsible for tokens or cryptocurrencies. Why are they responsible for those? How does kind of each of these various technologies fall under the different financial regulators? And supposedly, as we've said in previous Layer1Lives, we're supposed to get that. Obviously, that's not important right now. That's been put on hold. But maybe later this year into 2021, that comes to fruition, and we have FinCEN and the SEC and the FTC kind of working on their own individual categories within blockchain and within crypto. So, Deem, do you have any thoughts on the VC front there?
When Ripple settlement? Yeah, I mean, I think VCs kind of went aggressive when the hype was there. Also, so they picked up a lot of bags. I think some of them got burned. So I think there's also that the approach has changed significantly now. So VC's acting differently. They're not looking to just jump in and drop a lot of cash and hope for that thing to moon or whatnot. So I think the overall strategy and approach has changed significantly from VCs, and therefore you see that in terms of the amounts that are being invested and whatnot. Yeah, I mean, I don't think it's really I agree with what you guys said. It's hard to label it as a bearish or bullish because those things will go through cycles. Yeah, I just think it's an evolution for VCs, and especially with the regulatory stuff that Mike mentioned. Clarity would definitely would be good for VCs to start jumping in. Because I mean, like I mentioned, Ripple still has outstanding issues there that they need to settle.
Hey, be careful with your mic there, Deem. I noticed you changed it, but it's rubbing against your beard. So
no.
Yeah, straighten that out. I've got the next topic here.
I was gonna mention real quick. I found the insurance history for the private. Yeah, so they're sitting at 1,374 BTC at the moment. Quite low if you compare that, to like Bitmex.
Yep.
But the impact that they on their insurance fund was very low during that time when everybody got wrecked on their insurance fund. So their insurance fund was almost not impacted during the time when Bitcoin dropped a lot. So it's quite stable.
Interesting. Yeah, we were trying to get to the bottom of that in the last Dimitri's Desk episode. It's a little too technical for me, kind of the way the dual price mechanism works versus the dual price mechanism on Bitmex. But yeah, I mean, Bybit hit the market hard, and a lot of people were moving over, and then it kind of slowed a little bit, and they're still hanging around. So if they can continue, they might be able to really take a chunk out of Bitmex as Bitmex kind of supposedly continues to have these PR issues, at least with some traders. So
Bitcoin's flirting with 10% here.
Uh-oh.
Jesus.
It's the layer one pump.
Yep, that layer one. We've got Atari, we've got Russia to ban Bitcoin, we've got Coinbase and back news. Let's fly through these guys because we got a ton of stories left to get to, and let's make it happen.
Yeah, definitely. So if you haven't heard of Atari, maybe you're a millennial like us, but Atari was basically the godfather of video games in a lot of ways. And while they have not obviously been in the space for some time in any meaningful way, they seem to be using crypto to kind of come back to the forefront. We've had a lot of these kind of weird third party gaming consoles pop up. I think it was Google that's coming out with something, and trying to challenge Microsoft with Xbox and Sony with PlayStation. But Atari's getting into the game here, and like I said, they're going to use crypto. So there's a bunch of stuff going on. Kind of laying the context here. Evidently, Atari has been coming out with their own next generation video game console called the VCS, and if you Google Atari VCS, there's a great YouTube video that shows you the design, shows you that you'll be able to play all the old Atari games as well as new ones that game developers are going to be coming out with. As of earlier this year, they were actually supposed to start launching the VCS in March, but because of the coronavirus and because of manufacturing constraints in China and elsewhere, they have now seemingly pushed it back. There's not a ton of info on a new release date or anything like that, but kind of Atari's quote unquote rebrand was coming. And at the same time, they're planning on launching a 2-token ICO. This is generally, as far as I know, done to appease regulators, and not necessarily done for any definitive utility reason. But Atari is like I said, seemingly hitting not just the video game industry again here, but the crypto industry. They're talking about having, kind of like in-person casinos and gaming venues. I'm sure they're going to look at esports, and they're making a real push here in video games and in crypto. So I found this super interesting because of all of the cool games that they had, like Pong and what's the other one? Asteroids, and so many others that were kind of classic computer games back in just the PC days. But yeah, I know Q, you're a big gamer. What's kind of your thoughts after having read this?
I don't know too much about the token model. I'd like to understand the concept of 2 tokens and why they do 2 tokens. I think like we've seen big companies try to get into the ICO biz. Telegram had that issue that they are still going through to this day. I think we're too early, man, for a lot of these big companies to get in. I don't think there's a retail base to handle what they're trying to do. Now, it depends on it. Like, to me, if you're a crypto company and you start to offer a token and you're doing gaming, it's kind of like a double-edged sword, because like you don't have enough users to effectively make money, but you're not like burning through any type of cash by not having a user base. Whereas these big companies that try to come in, yeah, you have the user base, but you're burning through a ton of whatever cash you're trying to use to start this, crypto thing within your company. So I think we're too early from a retail perspective for big companies like EA Sports or companies like, what else am I thinking of? The companies behind COD, Activision, things like these. We're not big enough. We had Mike Dudas from The Block. It was funny because he was like, yeah, when we initially started The Block, we wanted to be super retail focused, and they did start at the top of that market, so that like everybody thought, hey, we're here for good, right? Like maybe like February 2018, I think they launched, and then it was like a slow decline. So they couldn't find the retail market, and I don't think the retail market's there to support something as big as an Atari. Now they might have small goals. I don't know. I don't know how many of their staff is allocated to working on this Pong token and different things like that within crypto, but it just seems too early. I know we've been talking about gaming and sports or esports for a long time, but for most of this shit, it seems too early. NFTs. Maybe they find their way into crypto, but to have your own associated token along with your game seems way too early. I don't know. What do you think, Dima?
Yeah, I agree with you, man. It's one thing that I want to mention is just like that company that created these games, like how relevant are those games right now? How many people are using? Maybe it could be like just a push for them as far as the marketing or something to do different, because they're kind of losing their crowd, basically right now. So and if you read, that company has changed hands a lot of times already with new management. So I don't know, man, how much I would give, as far as that being the big, significant news that be like, oh, this is so bullish, big companies getting in. Yeah, it is a big company, but like, there's also kind of a dinosaur, right?
That's fair. That's fair. And to talk about gambling in any sort, I don't know how big Atari is overseas, but all the gambling that we've seen has come from Asia. Like you're not seeing like a big retail push from Western users when it comes to gambling on blockchain.
Just build on Tron.
Why not, dude? Why not? Justin Sun, another one under his belt.
Yeah, for sure. Well,
Kieran just said they need a dual token system, ping and pong, then they will succeed.
Wow.
I like it, man. I like it. Yeah, I feel like Asteroids versus Warzone, Call of Duty Warzone right now is tough, or even like a Pokemon Go. But, time will tell. Hopefully Atari isn't one of those kind of like Long Island iced tea blockchain companies and is more actually something legit. But they've got a lot of hurdles to get through. They've been, like you said, Dean, they've been switching entities and even switching the people who are supposedly helping them develop these tokens and kind of this blockchain or crypto integration. So
yep.
Before we hit some good news on Coinbase and Backed, we promise it's coming. We have some potentially bearish news from Russia. What's the latest there, Q?
Yeah, this comes from Forbes. Looks like Russia has been trying to figure out its regulation for a little while. So this has been like in the works. I think it's been like the best or the most well-known secret that's been out there. But it looks like Russia's moving forward with banning the trading and creation of cryptocurrencies. So it doesn't really affect anyone if you if you're in the country and you've got Bitcoin, they're not going to come like seize your house or like seize you. Maybe they will, I don't know. KGB status, but it looks like based on this, they're looking to, and I'm going to read directly from the article here. It's delayed. So it says a senior Russian official has warned its delayed bill on digital assets will include a ban on issuing and selling cryptocurrencies. Now, again, like that's been in the works for a little while. It just seems like they, were pumping the brakes for whatever reason. But it looks like this might go through. It seems like a FUD article, if we're being honest. Like, I don't know how big this will be for the crypto industry. Obviously, if it goes through and the Russian government comes down super hard, then that'll be something that we'll see how that affects crypto in general. But, I don't know how much crypto is saturated in Moscow and different countries or different cities within Russia, but we'll see, man. Like basically that's what the story is. Russia's banning Bitcoin. I know we saw India kind of come through and lift that initial court ban that came through. So we had some bullish news that obviously got overshadowed by Iran and COVID and all these different things, but now we have Russia coming in and laying the hammer and sickle down onto crypto.
Yeah, the word came from the Russian central bank head of legal. That's the person that basically said we believe that there are big risks of legalizing the operations of cryptocurrencies from the standpoint of financial stability, money laundering, blah, 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 and all that jazz. If this goes through and they ban it, CZ is not going to be happy because he's making a big bet on Russia. He's setting up a shop there in Moscow, so that's going to be really bad for Binance. Also, just to keep in mind, Russia is overall very aggressive when it comes to capital controls and restrictions for regular people, not for the people that are the oligarchs and the government. Those guys can do whatever they want. But the regular people, there's many restrictions. And I wrote an article when I first started out at ICO Alert about how crypto will disrupt the capital controls. And that specific example that I talked about is just moving money out of Russia into US, for example. And the fees that you pay on that are unreal. And first of all, there are limitations. So you can do like 10,000 a month, and then you pay like a fee, like that's ridiculous. It's actually the fees in percentage, like it's percent of your capital.
Wow.
Yeah, it's just insane, right? So like, and it's supposed to be like in a way where it's like, well, it controls the population of people, so the money doesn't leave Russia, right? They basically keep their citizen hostage to the monetary
China
policy.
does the same.
Yeah, exactly. Well, and all countries do that. So, but Russia is very aggressive with it. So I think if there's going to be a situation where everybody's going to try to get out of ruble and get into dollars, and when they're going to start cracking down on limits and lowering the limits of the capital outflow out of Russia into the US dollar or into US and so on, then dude, like cryptocurrency is not going to be, flying there, because that's another way out for those people to go around the limitations of the government that is trying to maintain their monetary policies.
Yeah, I thought there was a story maybe like 6 months to a year ago about the crypto ruble, like the Russian government was trying to digitize their own currency. Did that happen? I'm trying to think. I'm like racking my brain.
That's that's happening like all over the world, other governments, but that's more of an interbank level where they're just using that as just the faster, more efficient way of transferring digital money, which we know is like huge right now. Right, nobody, the actual paper circulating is way less than what is actually available in funds worldwide. So it's just the back end, and it's nothing really that's like, oh, it's going to be on the Ethereum network, so it's like interbank level stuff.
Yeah, this just screams like Russia making sure that everyone's kind of a little sketched out, right? Like China has had this same strategy where they're not blatantly coming out and saying, hey, if you hold Bitcoin, you're going to jail. And even in this article on Forbes, someone within the Russian government or the Russian central bank was there admitting like, hey, we can't control it if people buy Bitcoin, right? Like there's nothing we can do. It's incredibly difficult on a massive scale to prove so many people have bought Bitcoin. I think they're more concerned about, this continuing crisis with COVID turning into a giant, issue with their currency, with the ruble, where you have people within Russia come out with some new dollar peg stablecoin and suck up a bunch of those rubles and further, kind of light on fire the problems that they're having with their currency and with the oil market. So this is kind of like, another warning shot to basically say, hey, if anything's going to happen with crypto, if anything's going to happen with any sort of digital currency, it's going to come from the government itself. You are not allowed to issue your own. You're not allowed to sell others. Basically we're kind of the head honcho here. We control this. And China has basically done the same thing. They, in a lot of ways, they've basically said, hey, Huobi, you're okay. Hey, OKX, you're okay. But, over the last few months, we've seen tons of smaller Chinese crypto exchanges kind of disappear off the face of the earth. So, yeah, I don't think this is a scenario where every Russian citizen is hunted down because they've, Google searched Bitcoin. I think it's more of just a control on that front. So,
agreed.
Yeah. On to the good news. Bakkt and Coinbase have very quietly, amidst this chaos, pushed forward some super interesting integrations and fundraisers and all sorts of things. So starting with Bakkt, as many may have seen, they raised $300 million in a Series B funding round. So in the same way we saw Ripple kind of lead the way in 2019 with their $200 million raise, like Q was just saying, I would imagine Bakkt will lead the way here with this $300 million raise. They are pushing forward with a Starbucks integration around what they're calling Bakkt Cash, which is essentially the same thing that Coinbase is working on, which I'll talk about here. But it would allow you as a consumer, someone who goes to Starbucks, to purchase cryptocurrency via a new Bakkt mobile app and pay with this quote unquote Bakkt Cash for your coffee or for your pastry or whatever it is within Starbucks. Now, Bakkt isn't, at least at this point, seemingly coming out with a stablecoin of any kind. It has more to do with the technology where they're able to transfer your cryptocurrency that you have and that dollar value of that cryptocurrency into, say, dollar, euro, whatever it is, that fiat currency at the time of purchase. So, Starbucks has really been on the front lines as a major retailer doing this. I'm sure Bakkt's plan is to use some of that 300 million to convert other retailers out there who have an interest in this. Bakkt obviously is a company from ICE, the Intercontinental Exchange, and has seen a lot of press around what they're trying to do on the future side with institutional folks and kind of acting as that regulated U.S. entity for crypto futures. But it seems to me that they're also at the same time doubling down on retail and what they think can happen from just a transaction standpoint between those who are buying and holding crypto and those who probably cross over and want to buy some Starbucks too. So super cool to see that. On the Coinbase front, very similar. They have basically said that the Coinbase debit card they have will now support Bitcoin, Ether, XRP, and Litecoin via Google Pay powered payments. So that's quite a tongue twister there. In 14 countries. So UK is a big one. You can see the entire list there on dailyhodl.com. Yeah, basically countries in Europe are the main ones starting here. The US is not on that list. Yeah, RIP. But this, in a similar way, any retailer or anyone who's accepting payments via Google Pay will be able to use this Coinbase card to pay via Bitcoin, ETH, XRP, or Litecoin. So, one of the things we were talking about in the beginning of the episode and that I mentioned was how I think for the next handful of months or years, Bitcoin will return back to primarily that retail-driven phenomena, that retail-driven, kind of currency or technology or network, right? Whatever you want to say. So seeing some of the largest institutions focus on those integrations versus, say, Bakkt just focusing on their futures platform, I think is super bullish. I mean, we need that infrastructure where you can, have one app on your phone, i.e. Coinbase or Bakkt, and one debit card like Coinbase card that then you can go into Starbucks, swipe, understand that, you've selected you want to use Bitcoin for your payments, and because you bought Bitcoin at, 5,500 and now it's worth 7,500, you're able to very easily use some of those profits or some of those, potential store of value components when just interacting with various retailers every day. So
one of the things we didn't touch on that I think is important for like user adoption in the same way that you're talking about it, and I need to get an update. What happened to the rates over the past on like lending services like BlockFi and Celsius? What happened to those rates over the past week? Did they, like, especially on Celsius? I think they update weekly.
Yeah.
I think that's a huge, as like we see rates almost go negative pretty much. Does that push user adoption like into like Celsius and BlockFi where you can actually chase yield?
Yeah, definitely. I mean, if you look at what is available for people to save right now in the traditional markets, it's very little. Banks are not giving anything. They haven't been for many years. So the problem that we've seen is that a lot of people's 401ks, a lot of people's pension plans have moved to a majority of equities. And these are the quote unquote safer equities, right? The mutual funds. And I think the problem that people have yet to really discuss is that when you have a black swan event like this, that value just gets wiped off the face of the planet. So if consumers very quickly lose faith in traditional markets to return any sort of value over a long amount of time, being able to earn, even if it's only 5-6% on a Celsius or a BlockFi, and even if consumers see that as more risky, they might take some portion of cash that they're holding in the bank and throw it over to one of these lenders. And that's why you're hearing so much about Celsius. You're hearing so much about BlockFi, because they understand that their opportunity to expand their customer base is growing, while I would argue their customer base who are currently in crypto is probably shrinking, right? As people capitulate or pull money just back into bank accounts. But to answer your question on the rate side, BlockFi has been pushing hard from a PR standpoint on adding Paxos, increasing their Bitcoin rate. So I think the first 5 Bitcoin you deposit, you can get something like 6.2%. And then Paxos, USDC, and Gemini Dollar, the 3 stablecoins they work with, you can get 8.6%.
Yeah. Yeah, specifically those stable coins intrigue me, man, because I feel like that if you can push education enough, and I think Coinbase is doing a good job of this. I like what they do with their staking system, where it like has that running counter. Have you seen that? Where it's like literally to the second it shows the savings rate that you're getting.
I haven't. That's cool.
Really?
It literally like it's going up like milli like 0.001 and it continues to go up. You guys should check that out. But for like specifically stable coins, man, because then you could convince someone that they're still in USD, but they're getting 9% instead of like, savings rate that they would get in their, savings account, or maybe and obviously in bonds and they could not be exposed to equities. They could be exposed to the US dollar, but they can get 8%, 9%. I think that's huge, but super off course. We'll hit the next point.
Yeah, we're jumping into BTC here. This has been a topic from kind of time and time again. Deem, I want to get your perspective on the general question of did institutions jump ship from BTC because of some CME futures volume, kind of that dropping off a little bit here?
Yeah, to be honest, this like the title of this article is just so clickbaity. Because it just talks, if you understand how the CME futures work, and if you look on the bigger scheme of things, like everything is business as usual, because you have to understand with a couple important things with the CME futures when it comes to Bitcoin trading. First of all, the settlement is done in cash. It's not done in Bitcoin. Second of all, they have expiration dates, the contracts, the futures contract, unlike the perpetual swaps that we know about, Bitmex and so on, where they keep on rolling and rolling and the contracts don't expire. Now, how does that, impact the volume? Well, if somebody's buying and holding the futures contract for a month, and just holding it, then there will be no traded volume during that month until the expiration, and then you'll see the trading volume increase. What you should be looking at is the open interest, which actually shows you, the open interest of the positions on CME, and that has been, up quite a bit since I think the article talks about it, since December to mid-February, open interest was continuing to rise. So I think it's just, it's easy kind of to make a point where you just pick let's say just March, for example, like they talk about March did have a 33% drop off. Yeah, if you pick that little sample, then, and without understanding the futures contracts expire and not understanding that the settlement is not done in BTC and all those things, then you're gonna be like, oh yeah, something is interesting happening. Institutions are dropping, they don't want to deal with BTC, but really that's not the case. I go over on Dimitri's desk all the time about the commitment of traders report. We'll look at the activity there to figure out the sentiment there. We'll look at the volumes. So things that I think overall are still fine for CME in the futures, and the institutions that continue to trade that normally. So
yeah, I would agree there. I mean, there's going to be a lot of FUD coming at you all for many months to come, right? And I think, other than just reading the article and kind of deciphering for yourself what it actually means, it's important to understand what new narratives emerge and why those articles are being written to follow those narratives. So whether or not institutions have jumped ship from BTC, only time will really tell. I mean, obviously the big drop down saw a lot of liquidations on the futures side, whether it's CME or Bitmex or whatever. And we saw a lot of margin calls on the lending side, but there's nothing that shows volumes or open interest just kind of falling flat to zero, right? So when you guys see these articles, be careful, dig a little deeper, understand why a Cointelegraph or why a CoinDesk is posting this stuff. In this case, there's a lot of bad news in the market right now. There's a lot of people reading about bad news, so maybe they posted because of that. But yeah, good to see that the CME is kind of continuing further, and I think that's a super important point to understand how these are not perpetual swaps, right? These are settled on a monthly basis, and the kind of the variation between open interest and volume and why those might shift one way or another in relation to each other.
And the article itself actually explains a lot of these things pretty well. So that's what I'm saying. The title of it really, like, come on, guys. But I mean, I guess they're trying to attract people to click on it and learn actually what it is, right? So I don't know. That's why I'm just hating the title, man.
Right. Yeah, for sure. For sure. Well, I've got the next one here. Interestingly enough, another thing has kind of fallen under the radar with Bitcoin Cash. Now, no one noticed this until it got pointed out by a famous crypto person, Jameson Lopp, on Twitter. But he basically mentioned that Bitcoin Cash transactions were generally in the range of about 40 to 50,000 on a daily basis. And since then, there has not been a single day with more than 20,000 transactions. Now, this is posted, quite a little bit ago. So, we might have seen those transactions bump back up, but it's hard to imagine in a time where transactions on ETH and Bitcoin have, basically hit all-time highs. I mean, the Ethereum blockchain was congested to the point where no one, as all this chaos was happening, no one could send ETH transactions for as long as like 44 minutes at one point. So it's hard to understand why Bitcoin Cash would just, completely fall off with transactions as the price is going crazy. This guy went as far to basically claim that Bitcoin Cash had, these transaction machines or generators that made it look like there was more activity. Knowing what people will do in crypto, I would not be surprised to see if that's the case. But thought it was super interesting as other blockchains were super congested. You've got one, Bitcoin Cash, who has completely fallen off here. So what do you think, Hugh? Do you think there's something else to this story, or could Bitcoin Cash actually be having issues?
I don't think I'm pretty sure that Bitcoin Cash is Bitcoin Cash. I think that I'm sure a majority of their transactions are handled by whales, and I don't understand the reason why that would fall off, but I don't have much thoughts on Bitcoin Cash, to be honest. I think it's bullshit.
I'll be careful with that. We have Kieran in chat, who's a big holder of Bitcoin Cash. I bet he has something to say about that. He's actually has a contract that's locked this Bitcoin Cash for 6 months, I think.
Oh God. Yeah. I'll make sure. Hey, when this goes to print, I'll make sure to cut this part of the episode, Kieran.
But yeah, I don't know. It's always interesting with the forks and the activities that happen there, right? With Ethereum Classic and so on, right? Obviously, it doesn't sound good, right, for Bitcoin Cash. It's definitely not something that will kind of confirm the confidence in the fork. So it's tricky.
Yeah. So as far as the transactions go, do we have data on where most of those transactions were coming from? Because that would just, my thought process here is if it dropped off so much, it was primarily handled by a bunch of whales.
Yeah, it doesn't say. It doesn't say in the article there. I'm going to load that up here real quick just so that we can at least see kind of where it stands today. See if it's been able to bounce back. But yeah, it's something we'll obviously monitor. And something we'll keep you guys posted on.
Yeah, I think there's some comments in the article here. It says, joking that Bitcoin Cash transaction halving came early. Someone turned off their transaction generator, which I feel like that's the kind of the point that I was trying to get at. Let's see. Yeah, we'll see, man. We'll see.
Yep, for sure. So, cool. Well, we have a couple other things here. I don't think we need to hit all of these. It looks like we're running on about an hour and a half here. Mm-hmm. There's lots of FUD in the market right now, guys. There's lots of concerns over whales kind of messing with the Bitcoin price right now. And, the ETH is going to crash because most Ethereum holders are underwater at these price levels. Be careful. Don't get wrapped up too much in kind of this bearish hype cycle that seems to be happening. Make sure to read through this. Make sure that there is data that's backing a lot of these claims. I do want to talk EOS, Tezos, and STEEM. But before we get there, any Ethereum Classic fans out there was a big person within what is called the Ethereum Classic Collective Board. He was a main member who has withdrawn from this kind of Ethereum Classic cooperative and pulled funding. So there's a three member board under this cooperative, and one of those people, James Woe, has pulled out. To give you an idea of kind of the clout there, he is one alongside Barry Silbert of Digital Currency Group, which has, as we said months prior, continued to back development on Ethereum Classic so that it doesn't kind of fall off from a development standpoint. But there's been a lot of concerns around the person who's running this collective, Bob Somerville, that they're not kind of going about this collective in the proper way, that funds are being mismanaged. There's, seemingly a lot of travel expenses that are coming up that are hard to understand where the business is being done, and perhaps there's kind of more pleasure being done on those travel. Some
taco runs, maybe some tequila tequila runs.
Yeah, for sure. If you don't know what we're talking about, you got to listen to the Sutler interview we did with myself about Dima's story there. But
Dima, I think you're mute. Oh, there he is. Yeah.
Yeah.
Gotcha.
Yeah, good times there. But it's Ethereum Classic is kind of this. It's kind of like a Litecoin to me. It's in this weird spot where they've struggled over the past months and years to really move forward with a lot of developers. It's not to say that they won't be successful in the future, but this in a similar way, like we saw the issues with Zachy Manian at Cosmos. This seems to be something, kind of more on the funding side that might be an issue with Ethereum Classic.
Yeah, I do want to get to Kieran real quick. He did say from the 8th to the 14th, it dropped from 38K to 20K. That was about Bitcoin Cash. It's back up to about 50K per day. This is transactions. Kieran, if you have a theory on why Bitcoin Cash is going through that, please let us know, because we want to hear directly from people involved. As far as Ethereum Classic goes, I agree with you. Like, it seems like just I don't want to say waste of space at this point, but I just did. Yeah. It was funny. Like, crypto Twitter spats are literally like my guilty pleasure. Other than those crypto memes videos, those are like literally the funniest things in the history of the earth. But it was funny to see, I guess Vitalik was commenting on the STEEM situation that we'll get to in a second. He was like, he was kind of shitting on Justin Sun and basically saying, like, I'm interested to see what happens with the community and how the Hive goes about this. And Justin Sun was like, I'll make sure to contact the Ethereum Classic devs for you, or something to that, because it's literally a similar situation, right? Like, you have legacy community members that want to continue along a certain path. I mean, it's not like there was no acquisition, but I'm sure it was like very hostile at the time. I wasn't around for that Ethereum Classic hack, I think, but it was funny to see Justin Sun clap back at Vitalik for that one.
Yeah, for sure. What's going on? I mean, I feel like every day we get a new piece of news or a new crisis on this STEEM acquisition. But you tweeted something out this morning that had me LOL. And what's the latest with STEEM in this hard fork?
So this is actually a pretty big story that I didn't know happened, but Huobi and Binance initially backed Justin Sun and all this before it really blew up, and they were going to get all that community backed. So with this new hard fork that the STEEM community actually is pushed forward, and it literally, I believe, mainnet's live going on right now. It's going to be the HIVE network, I'm assuming. But Huobi and Binance actually backed the HIVE on this. So, like, initially, I think Mike's going to the bathroom. God Dude, someone needs to get him like a colostomy bag and just like just like have connected to him. But no, it is interesting because Huobi and Binance first came out and backed Justin, and now it looks like they're offering support to the like a 1-for-1 support of these Hive tokens for their people who have like staked or have their tokens on their exchange. So it's interesting to see Binance and Huobi move from supporting Justin Sun publicly to now supporting the Hive hard fork. I think that's the way to do it. They lose more from a community perspective if people, especially in these hard times, aren't getting the tokens that like free money. Let's be honest. Like sometimes these airdrops are completely a cash grab. If they didn't support it and their community members didn't get these drops, those members would be pissed. So I understand from a business perspective why they're going about it that way, but it is interesting to see the switch from backing Sun to,
Yeah. Justin Sun's not having a good time, man. I love the tweet that you did too, man. That is just so perfect.
Oh, the one where he's walking down the stairs. Yeah. That GIF actually was in relation to another story that goes along with this. Which is the fact that I guess there's a Hive mining company. Let me pull this up.
Right. Mm-hmm.
Yeah, it looks like there's a Hive mining company, and they are threatening legal action against this Hive network for obviously like copyright infringement. So it is interesting. Like the Hive, is there a foundation behind Hive? Because who are you suing? Are you suing the top 3 block producers or validators on Hive? How do you go about suing or threatening legal action against a decentralized network? So all of these things are really interesting to figure out. But Mike, while you were gone, I was saying that Binance and Huobi actually switched to now supporting the Hive community in a probably a smart business decision. What do you think about that?
100%. I think, and time will tell, but this might be a pretty significant blow to Tron and Steem and Justin Sun, right? I mean, assuming we don't just run into a giant bull market here for crypto, right? If we continue into a recessionary time with traditional markets and see something similar with crypto, it's going to be hard to get a lot of hype, right? Get a lot of growth around Tron and kind of this different acquisition model that Justin Sun has taken. Polynex had its issues, but things kind of leveled out, and this is just turned into an absolute disaster. So to your point, when you see 2 of the largest exchanges who at first supported this decision, but now have kind of felt backstabbed a little bit in a lot of ways by Sun, it's hard to understand who's still backing this acquisition and where Tron kind of goes from here. At the same time, obviously Hive isn't, very well managed. If the people that sent the cease and desist to whoever they sent it to, they're a publicly listed company, right? It's not like they're a brand new company. I mean, they're publicly listed in Canada. And a giant firm with a ton of resources. So, as the article states, right, the first thing you do is Google the name that you want to come up with, which they haven't done. And there's been, not a lot of great things happening with those STEEM block producers. There's been a lot of complaints with them in the past. So, as one of the initial social media networks, kind of crypto social media networks, to see all this happen is super unfortunate. But for either route, I don't know where we go from here. There's just every disaster is compounded by another one. And for now, we'll just kind of do the Kermit sipping of the tea and see what happens, I guess.
Yeah, it's nice to be on the outside of this and watching it. I'm sure it can't be that good for the inside. I imagine, it says they sent the cease and desist to hive.io. And I imagine it's just like the guy that we see on YouTube all the time, who's like been the major rally flag for the community. I forgot his name. I think his first name's Luke. But yeah, man, that's what's going on with Hive right now. We'll see. Obviously, it's shown that you can't purchase a community if the community can hard fork and get rid of, but that doesn't mean Steem can't go forward on the Tron network, and Justin Sun can brand this network, especially now that screwed up this Hive situation, he can use that as an opportunity to maybe gain some goodwill back from the community. So we do have to move on to EOS here. We had that worker proposal system. We talked about it on the last podcast, or the last Layer1Live. The worker proposal system is going to use funds that are in a pool, and this was back. This is not like being created out of inflation. It was created out of RAM fees, as well as, I believe, some type of name service where people were creating accounts. So basically, there's this pool of millions of dollars, and EOS Nation and Attic Lab actually worked together to create this proposal that was going to allow the community, and specifically nodes who are voted by the community, to use this worker proposal system in ways to fund community development, right? So like if you have a certain amount of nodes, 15 out of like 21, something like that, you would be able to determine 25K to that certain project. It's a lot like what we talked about with the Meta Cartel, right?
Right.
We've been getting more involved with them. They have a DAO structure where they can fund community development by coming to consensus on a project that is going to push the Meta Cartel forward. Same thing for EOS. So that's not really the story here, since we talked about it last time. Although I am interested to hear your guys' thoughts on this DAO structure and this worker proposal. The story is actually Brendan Bloomer coming out against the worker proposal system. So it was kind of like a kumbaya moment.
That's weird.
Yeah. It's a super interesting. Like, I like talking macro Bitcoin stuff. I do. I think you guys are like super involved in it and really like have the experience to talk about it. Whereas my non-finance background, I'm very much more interested in like the goings on these different networks. So I like get super involved in these stories. But basically, Brendan came out and basically said that like it's bad for all the reasons that we've talked about before. So mainly you have an idea of governance, right? Like who actually gets to control these funds. He thinks, and I'll read it from his words right now, but basically who's controlling the use of these funds, because that could be gamed, as well as the security risk that you have with being able to access these funds. So instead of burning the funds like we've done with the previous worker proposal systems, they're going to be using it, meaning that that's a honeypot for hackers. But let me get right to what he's saying. Even if the amount is nominal, socially authorizing the BPs to direct token holder funds into projects without a clear or measurable return of value is risky and may open the door to corruption and external security. Further, the work proposal system may alienate EOS from some others in the blockchain community and media, and therefore potentially stake its future largely on the success of the worker proposal system itself. So, I mean, take those words for what it will be. I was in favor of the work proposal system, but I understand, the idea of maybe the code being insecure or some type of like hack able to hack these funds from the actual WPS. I like the idea of like coming together as a community and trying to figure out how to fund these different projects, but it looks like Brendan is against it.
Yeah, I think broadly it's a great idea if you can, like you said, in the same way Meta Cartel does, right? Have some sort of simple but effectively designed solution to get those who care about the future of EOS involved in some financial way other than just holding the tokens. That's great, and especially if they can vote on it. It seems to me like his biggest concern is that these block producers that control the network and thus would, in this case, I guess, control the voting theoretically on the worker proposal systems, that they would direct the cash to projects that the majority of the community wouldn't want, right? And when that happens, that's when you run into like forks,
it's
right?
like Pandora's box
chains.
almost.
Yeah, if you have a majority of block producers who want gaming to happen or gambling to happen or layer 2 scaling solutions or something, but block producers just want to push money to some sort of futures exchange or to themselves, it's divisiveness, right? And now communities get split in half, and you run into all sorts of issues there. When it comes to DAO structures, there are very few that I look at as successful. I think there are a lot that are brand new. Like we said, Meta Cartel's done a great job thus far. They are brand new. but they've been able to go out and get a lot of people involved and seemingly put together a good structure. But when I think, at least for me, when I look at public blockchain networks that have done an ICO, especially those that have some sort of foundation like a Block One or like a Tezos Foundation or like an Ethereum Foundation, when you start to shift from that foundation being the one who issues those grants or the one that kind of doles out that money to more of kind of this public like social DAO, in a lot of ways, that's kind of like the end of the road for that network to me. What that generally signals to me, especially if the foundation is low on resources, is kind of those that work for the foundation, those that develop the core code, kind of doing a washing of their hands and moving on to another project and saying, hey, yeah, you know, you community folks, do whatever you want. If you can raise the money, you can build some game or whatever, go for it, right? We see that in a lot of older generation layer one protocols where it just turns into this weird DAO and everybody's kind of arguing on what's going to happen, and people come and people go, and there's these flawed incentive models. So, you know, I think I don't necessarily disagree with Brendan. I do like the overall concept of a work proposal system, but I think it has to be done in a way where pretty much everybody's on board, or it's just going to lead to more problems than the solutions I think it could present.
Yeah, I think, Dima, do you have anything there?
Yeah, no, I was just going to mention that for those guys that are interested to learn more about it, we did have an interview with EOS Nation, you know, and they broke it down, and we asked pretty good questions there in terms of how it would be handled. But at the end of the day, you know, again, you know, it becomes as a theory, right? Again, you know, so on paper it sounds legit, right, in the way they explain it. But you know, we'll have to see how that's going to be done in practice, and that's interesting what Mike mentioned about. You know, where you have proposals and then, you know, you have that capital that goes into maybe something that's not everybody would agree.
Yeah.
You know, that it creates a little bit of a division there. Yeah, it's tough.
Yeah, I think Mike makes a fair point about the kind of foundation behind these networks. I think where you'll see a lot of like visceral reactions from the community is in relation to where they think Block One is being inactive, and the reason behind that being they have all the cash. Like they don't need to. They could be as slow as possible. They got billies. You know what I'm saying? They got $3 billion in cash. You know, I don't know the exact number, but they got a lot of money. Meaning they don't need to move very quickly. Whereas people in the network don't have that. You know, we just don't have those type of funds. Obviously, like no one's sitting around here with even like 100 mil, 50 mil to, you know, like, so these funds being used to push the community forward where they're perceiving Block One being inactive, that's where you'll see the argument. It's like, okay, you can come down from your high castle here and tell us that we can't fund these projects while you're sitting on 4 billion. So, you know, Scott's in the chat. He says, as an EOS token holder, I'm in favor of the worker proposal system on EOS. And Kieran says 350, so it's probably 3.5 bill.
Wow, God, that's crazy. Let me ask you this, right? So, Block One obviously raised all that money. They've pushed forward on, you know, upgrades to EOS and EOS IO 2.0.
That's fair.
You know, Voice is their next big thing, right? I think they even in a lot of ways put together the EOS VC system. But now, to me, as someone who's not as involved in the EOS community, if Block One is not investing in the community itself, and EOS VC, you know, you haven't really heard anything about, like, is the worker proposal then the solution to this? Or do you think, you know, down the road as things evolve, Block One could have a setup where they're going to small dApps or whatnot and sending funds? It's just the wrong time kind of thing. Like what I guess my question to you is, like, where does the funding for EOS development go from here, understanding the history of Block One and EOS VC and now this worker proposal system?
Well, I will say Brendan's been great about being involved in the community, whereas I feel like and Dan still is, but what you would hate to see is them be radio silent on everything, right? Because then you'll have the fear it's like, oh shit, they're gonna move on, like, or they've got their money, they're gonna do whatever with voice and not have anything go on with the EOS ecosystem. So regulation, they've been super involved with government regulation, SEC regulation. So they're going to stay within boundaries. And if there was no reg, I feel like they would be all over this shit. They would be punting money here or there, whether that's a good thing or they could get caught up like Joe Lubin, giving all this money and pretty much none of them working out. That's another argument. But I think they'll be more active going forward. It's just they're going to be super slow with it. And I think the worker proposal system is the community's reaction to that. It's, you guys aren't moving fast enough. You have all this money. You're not going to do anything with it. Well, we have to do something, right. I don't think it's like a last ditch effort. I just think it's a good idea. And Scott, I'm with you. I think this work proposal system is a good idea. But to Dimitri's point, it could have been Pandora's box. You open it up, something goes wrong, like the Chinese, block producers. Maybe we have like a problem there, and it completely, gets torn to shreds.
Everybody moves to a side chain or something like that. Yeah, which it's EOS is a complicated ecosystem right now. I mean, I think they're at a much better place than a lot of the other layer one protocols. I mean, especially with everything going on with Justin Sun right now. So EOS, Tezos, ETH, right? They're still here. They're still rocking and rolling. Tezos is the next one here to talk about. They're obviously a lot newer. They've had a lot of hype, especially from the price standpoint in 2019. But yeah, it's interesting, right? Like the fact that we continue to talk about EOS when we aren't talking about a lot of layer one protocols other than an EOS, an ETH, or a Tezos. And I've mentioned this before, right? Like I have Google Alerts set up for at least top 25, if not top 50, projects out there, and the same ones continue to come through, right? The same protocol. So while it's a controversy, I think it's bullish for EOS. I think it's a good thing that these questions are still coming up, that these discussions are coming up, versus Tron founder buys some social media network and it goes to chaos kind of thing. So
what kind of news are you getting for Neo?
Not much, that's the thing, exactly, right? Like it's all the only news for Neo is or Qtum or so many of those is basically like Qtum price down 6%.
Yeah, exactly.
Technical levels for bulls or blah blah blah, and there's not really anything happening behind the scenes from a development standpoint or a community standpoint, and it's mostly just kind of traders giving gains back and forth to each other. So on that front with layer one protocols that are seemingly doing things, one of the co-founders of Tezos, Kathleen Brightman, who is the husband to Arthur Brightman, the two founders of Tezos, are coming out with a new game along the lines of Hearthstone. It's going to be called Emergence, EMERGENTS, Emergence. So this is, for those who don't know, going to be kind of like a card game style game, and obviously running with the narrative that working from home is going to be a big thing. So thus, kind of collectible card games are going to be a big thing, right? A lot of family time, a lot of card games, and Magic the Gathering has been, arguably the biggest and most successful card game in history under Hasbro, and Blizzard's Hearthstone has brought in hundreds of millions of dollars for that company. So these are not kind of small businesses. The opportunity to come in as a crypto-backed digital/physical collectible card game could be super big. And while I'm someone who is a little more not jaded, but kind of not as bullish on crypto gaming in a lot of ways, I think this could actually be pretty big, because I think it could mesh the physical and the demand that we see for physical card games with the NFT digital token space, and all of the kind of growth that we continue to see on the crypto front. So basically what I'm saying is if you can marry the traditional real world demand of a card game like you see with Hearthstone and Magic the Gathering with all of the bullish growth with NFTs and collectibles and crypto, you could see some some pretty cool things start to happen. So there's not a ton of information on kind of when this is coming out. The article from CoinDesk has a great video from Kathleen Brightman there, and talks a lot about the different kind of perks or components of the game. But it's still very much an alpha. It's still very much just kind of being announced. It is going to be using the Tezos blockchain for obvious reasons. But overall, I thought this was something that was pretty cool.
Yeah, is this Tezos' first kind of foray into attracting retail investors onto their platform? They were pushing for STOs, correct?
Yeah, STOs has been their big push. I think that has more to do with the investors in the Tezos ICO and also the block producers of Tezos. But yeah, you're exactly right. I mean, as far as one of the main Tezos co-founders kind of pushing forward on something like a block one pushing forward on voice. Yeah, this is very much the first kind of big foray there. So yeah.
We talked about and I looked it up because it just like popped into my brain, but I don't know if you guys remember, but on a couple layer ones, maybe 2 layer ones ago or Layer1Lives ago, we talked about Horizon blockchain games raising funds for a game called Skyweaver. So these and it's literally the exact same as a Hearthstone competitor. We already have a consensus backed Gods Unchained. So it's interesting to see all of these trading card games come to fruition. I think it is low hanging fruit, right? Like NFTs, trading cards, literally makes sense. And to like have, I mean, I just think it's low hanging fruit, right? It's like super. Yeah. It's the easiest thing that you can do with NFTs when it comes to gaming. And I think it is a popular game. Hearthstone's obviously popular. I know Mythical Games was like a big thing on EOS. I wonder whatever happened to Mythical Games. If you guys are in the chat and know anything about it, I think they just like kind of went dark. They were like EOS VC backed and stuff like that, but they were a Blizzard. They were like an arm of Blizzard that was going to be about this kind of stuff. But it is interesting to see 3 separate like trading card games like you're talking about popping up within a short amount of time.
Yeah, some other details there, right? So there will be a company called COASE, COASE, that kind of runs this. So it's not going to be run by the Tezos Foundation, right? They're just obviously using the Tezos tech. But the thing that I found cool is that as we talked about with Metacartel and some others on the podcast, the company COASE is going to be using bonding curves to distribute the cards, right? So essentially, every time a card is sold, the next card sold will be just a bit pricier. So that's great.
It's like a Dutch auction.
It's kind of like a Dutch auction, but the added context and the components that make this interesting is that COASE will act as kind of a market maker for the cards, right? So yes, you can buy the cards as they're issued, but you can also sell them back to COASE. So there's a scenario where as this game is coming out, as people are, buying these cards and using these cards, and let's say they figure out some combination on how to win this new emergence game, right? And one of these core cards is a way to win that game, and you were an early buyer of this card, well, that card is going to skyrocket in price, right? So if you're someone who plays this game, you get big into it, and you're able to discover different strategies for different cards, that could pump the price of your card, which would allow you to sell it back to COASE to then buy other cards for other, strategy thesis that you might have on how to win the game. So there's a lot of game theory going on behind it. There's a lot of that kind of physical digital, convergence happening. And if they're doing it on the Tezos blockchain with the, one of the Tezos co-founders, I would imagine they're going to have, some pretty significant backing, both on the financial level and on the tech level as well. So, yeah.
From a, how can I say this? From an emotional level, I could see it like taking the soul of a lot of these games, right? If you like start to pay to earn, a lot of it'll just be grinding for money. But that's not to say that it doesn't already happen. It's just, it'll be interesting to see. what goes on there. Guys, I did put, like, it's literally a thumbnail in this video, so we have to talk about it. Solana is doing their ICO, like Dutch auction, on Coinlist literally tomorrow. So I think like literally tonight they're doing it. I want to talk about one thing, man. Like, I want to read this specific part. I put it in the I'll put it in the chat now so that you guys can click on it if you need to. Let's see. Is that, yeah, it went on. 90% staker price guarantee. You ready? So it's already a Dutch auction. We'll see how that goes in this type of environment. Solana plans to launch a staker price guarantee after the auction. The goal of the program is to encourage staking and price stability. As part of this program, auction participants who stake their tokens will enjoy a 90% price guarantee on their staked SOL tokens.
Oh man, this yeah. I mean,
Excuse me.
Obviously, Solana's not doing this at an ideal time. People are not flush with cash, ready to invest in the next protocol trying to take over ETH. But I get where they're coming from, right? Like, there's a real risk that you launch this and no one's willing to stake because they don't want to put in cash into a token that, as we've seen with so many previous brand new staking protocols, just dumps as soon as it hits public markets. I get that. The risk is that, if it does dump, Solana blows all their money paying out the block producers they've promised. They've promised, we'll see this 90% kind of.
And where is it going to go from there?
Say that again.
Where would it go from there? If the price dumps and they have to pay out all these block producers, like, what's going to happen after that? It's like, if it continues to dump. Like,
it looks like it says it's between auction times. So between the auction starting and between the auction ending, it's a buyback guarantee for 90% of auction price at any time.
Oh, that makes more sense. Yeah. Okay. Gotcha.
So it's not like at any point in going forward.
Yeah. No.
Sorry,
that makes more sense. Yeah, for sure. So yeah, basically ensuring that Algorand kind of did something like this after the fact and got a ton of heat for it, but they're just doing it from the jump because the Dutch auction, in the case of Algorand, and like I said, understanding times are pretty chaotic right now, could result in a high price for the SOL token that by the time it settles and consolidates on public markets, assuming a lot of sell pressure from previous investors like your venture types or your high net worth types, could crush a lot of the retail folks who want to get in here. But
yeah, they've been raising money for a long time here, so I wonder how that vesting schedule works with the listing on exchanges and things like that. But they are a well-known project. I mean, they're, like you said, they're an Ethereum competitor. They're trying to run a scalable network. The same song and dance as a lot of these networks. So, but they've been around for a while, since at least 2017. They did their seed round in March of 2018, raised a ton of money. I'm looking at it here. It looks like 25 mil over the life of, I think their last round was 2.4 in February 2020. So these guys have been around a long time. It will be interesting to see where they go from here, man. But that is at the auction. If you want to check it out, go to coinlist.co/Solana. I need to look at like the rules of investing as far as like the reg around it. I'm not sure. Yeah, it says non-US participants. But yeah, it's an interesting project. They kind of fall in the realm of a lot of the other hybrid staking consensus models that have come out in the last 12 to 18 months. The thing that worries me, and we got past the deck for a round previous to the Coinlist, I believe, was those vesting schedules, right? They were pretty short, where if you look on their website or look on the Coinlist website here, the seed round, $3.2 million raised at 4 cents per token. Founding round, and this is all in 2018 here, 20 cents per token. Then in July 2019, the validator round, right? 22.5 cents per token. And now this launch round will be at 25 cents per token. That was in February 2020. So, as they launch, you got many millions of dollars with token prices in the pennies from venture folks who are managing other people's money.
and a starting bid on the Dutch auction of $4 per token. So if this thing hits public markets at $1 or higher, which, you know, I would imagine it's estimated to do, unless the auction just completely falls flat on its face. It's going to be hard as somebody who bought the token for 4 cents not to sell it at $1.50 or even $1.50, you know.
Mm-hmm.
And I
How
think
do I short this thing, man? That's all I want.
Hey, easy. I think I'm talking with Raj right now, actually, not on call, but we're gonna have Solana here on the podcast shortly. So hopefully they don't get to the end of this episode and hear about you shorting them.
Yeah, and it's not a Solana problem, right? Like any new network that's launching is going to have this issue. You know, you have to raise money in order to fund development, in order to pay all the people that are, you know, helping launch Solana. You know, you want to get validators involved, you want to get nodes involved, and a lot of times the best way to do that is to give them a cheaper price. But you know, you do run into a lot of hurdles that a lot of projects have not been able to figure out yet. So tons of big backers here. You know, they're already saying that they're going to have Coinbase, Trust Wallet, and Ledger as wallet partners, and a ton of big staking partners like Bison Trails and Cryptium Labs and Figment and a lot of these guys. So yeah, we'd love to have Solana on the podcast. We can kind of hear from them on what their strategy has been, what the auction at that time, I guess, will have ended and looks like. But yeah, if anybody's interested, you know, that's kicking off here. Looks like March 24th at 5 a.m. UTC time.
Yep. So that's pretty much the episode, man. We appreciate you guys staying along. That was a long, probably our longest. We did have that issue with YouTube. I don't know why it wasn't showing up on people's dashboards, but it was in their kind of playlist on that left-hand side. So not as many people as we're used to, but we will be pushing this to audio as well. Next time we do this Monday, we'll have a interesting structure that we'll be pushing to you guys. We'll see if that helps, but we'll continue to make these Layer1Lives better and better, man. I know it's a little bit different having Mike and Dima kind of not in like a live fashion, but we appreciate everyone that has followed around or along. You guys have been awesome, man. Thank you for supporting us up to this point. You guys got anything?
Yeah, I mean, this episode was pretty long. I had to charge my AirPods twice. So I definitely enjoyed it. And yeah, if you're looking for price action, Dimitri's desk, we got you covered there. You know, since we started this podcast, it looks like BTC went up 4%, you know, so we did well.
The Layer 1 pump, man. Yeah, for sure. I know it was a little more of a bearish episode. That's kind of the news these days. Everybody's talking the end of Bitcoin, you know, the death of Bitcoin. But, you know, hang in there. We will continue to bring the news to you guys, whether it's on Bitcoin and the price, or it's on some of these other protocols, or just kind of traditional markets in general. So yeah, around the same time next week, we'll see you there.
Yep. Shout out Kieran. Shout out Scott. Shout out Cryptov. Michael Kat's been in the chat, chatting away, man. We love to see that engagement in Telegram. Who else do we have that we can shout out? Looks like Jason Stalling's been in the chat. Pete's been in the chat. Metnix. You guys all are killing it, man. So we appreciate the support.
Until next time.